How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you back to our live webinar tonight, where we're going to talk about how to turn news to trades. It's a easy webinar. It's you don't have to take too many notes. It won't last too long. It's very straightforward, but it's probably one of the most valuable insights. If you don't already have it, you may gain into successful trading. Well, hello, Muhammad. Good to see you. In fact, Muhammad reminds me to ask you all to please indicate on the question area whether you can hear my voice, see the opening screen, and if so, we will begin straight away. Just a simple acknowledgement in the question answer. Say hello. Say all good. Says Osman. Good to see you. Okay, great. That's enough for me. I'm not going to belabor this point too much. Let me just introduce myself by saying that I'm Seth Julian, Chief Global Strategist here at Alvexo Trading, and I'm 65 years old now. I've been trading for, 52 years now in the capital markets. I had to do a little calculation. I started as a young man trading a stock called Xerox, and I've been trading ever since. I started my career on Wall Street in the early 1980s, an outfit called Bankers Trust, and have worked at 3 different international brokerage firms, the last of which, of course, is Alvexo, where I am today. I only have one protocol in the room, ladies and gentlemen, and that is that you are asked to please ask your questions in real time. It really assists in making it more of a dialogue as opposed to a coma-inducing monologue. And these aren't protocols, but there are a couple of requests. You'll see at the bottom of the control panel polls. There are polls. It's a little survey we take, and there's also a survey we take after the session. Please, if you can, fill them out because they give us important feedback as to how to improve these sessions and make them better for you all. So if there are no questions, let us begin straight away. I want to point actually to these very opening screens here, these opening pictures on the screen. This is a weather system, big weather system, the Gulf of Mexico. And that's really important because, first of all, the Gulf of Mexico is the origin of the Gulf Stream, which warms Europe and is a major meteorological phenomena on the planet, has a huge role. But in particular for us as traders, the Gulf of Mexico is the heart of the United States energy industry. Houston is right here on the coast, and Galveston, its delivery port is right there. Cushing, Oklahoma is right up here, where the U.S. WTI contract delivers. And so, and I forgot to mention that there are hundreds of deep sea wells in the Gulf of Mexico. So when you see a storm like this, you can be positively sure that oil production is going to decrease, depending on how severe the storm is. Prices are likely to jump. So just this picture alone gives me, as a trader in the oil market, an indication of whether I should be going long oil. Here's a picture of a wheat field that looks damaged somehow. It is damaged. It's been damaged by the weather. Again, the weather playing a major role in field crops and their status. And of course, the usual just breaking news that is important to all of us. So just a little bit, of background. The content is considered that we're discussing tonight is market commentary. It shouldn't be perceived as independent investment research or investment advice. Is given to you by your broker who knows your appetite for risk, your net worth, your account status, things like that. And she'll give you guidance, support, advice, financial assistance, and tips. This is more like a couple of people just viewing something commonly, sharing an experience together, and gathering information from. The other thing I want to point out to you is that offer contracts for difference, CFDs, although we're in the process of making actual shares available to our clients. But in the meantime, we trade in derivatives. And these derivative instruments are derived from or based on the underlying stock or commodity or currency pair or bond or what have you. And the price movements of the CFD are derived from, hence the name, the actual asset price movements. And there's a reason that the vast majority of capital asset trading is done in derivatives and not the underlying, because they're way more flexible, they're way more efficient, they're cheaper. And so, but I want you to be aware that we do not trade in the underlyings. So, news, widely and narrowly defined, drives asset prices. It's always been this way. The first communication over the transatlantic cable, which was laid in the 1850s, if I'm not mistaken, 1854, I think, was the pound sterling US dollar exchange rate in London. The pair is commonly referred to until this day as cable. When you hear the cable is this or that, it means pound dollar. So communication and news are synonymous, and news and trading opportunities should be synonymous. Now, one of the things that I wanted to mention about news, one of the principal drivers in news is the economic calendar. And that contains reports that come out on a daily, weekly, monthly basis, as well as quarterly financial statement reports by public corporations. And these are events that drive traders to go long or short. And you don't need, but I feel it, to my trading, certainly, and trading of many, many people around the world, being aware of the news is the single most advantageous edge that you can use in the market. And those of you who have attended these sessions over the years know I have my technical indicators, I use my graphs, and I use different ones on occasion. But particularly for newcomers who may be of the opinion that it's all about the indicators on the graph and that's how you can trade successfully, I don't believe in that. I don't want to derisorily attack anybody who's strictly a technical trader, but my opinion is that you need the technical indicators to help you with the fundamentals. And to use a sort of broader metaphor that I would like to share with you, think of the windshield of your car, or the windshield of your marine vessel, or the windshield of your aircraft, or any vehicle that you're piloting as the fundamentals. That means the direction you're taking to travel, the destination you seek to reach. Those are the fundamentals. You want to be aware of what's coming up, on those fundamentals. The technical indicators, think of them as your dashboard. So you need to know what the oil pressure is and the water temperature and the tachometer, but you can't get anywhere by looking at the indicators. You'll kill yourself. You'll drive into a tree. You need to look at the big picture, or what the economists and the commentary refer to as the macro picture, and that will tell you what's happening in general, and then you can time your entries and your exits, so you can see where resistance and support is in terms of where to get in and get out. But without knowing what the fundamentals are, i.e. the news, fundamentals is a fancy ass word for news. Without knowing what's happening, the news, those technical indicators are going to be far less effective for you than if you know the news and then use the technical indicators as entry and exit indicator. So we live in this golden age of information. Markets react more quickly to and are generally more aware of and consider future implications of current events. Now, therefore, I'll come back to this golden age in a moment. Everybody, audio okay? You may need to reduce your mic level. I'm getting a message from the system. Sound okay to everybody? So, a couple of points here. Yes, okay, thank you, Osman. The first bit about the golden age of information. It's a blessing and a curse. When I started out trading many, many years ago, I used to get my charts sent to me in the mail once a week. I used to draw my lines and indicators and things like that on the charts myself. And of course, the news was delivered in paper form to my door in the morning, the office. Once the internet and the personal computer marry up in about the mid-1990s, we enter the golden age of information. Hi, Oki, good to see you again. And the reason I say it's a blessing and a curse is we have now, as humble traders, the same informational advantages that the big boys had when I started out trading many, many years ago. They used to have the only trading screen available at the time was the Reuters screen, and that was $2,000 a month. The host is interrupting and I can barely hear. I am the host, Pat. I don't know anybody's interrupting. The network works fine. The sound, Pats, how's the sound? I'm sorry, I don't know my glasses. Did I read your names wrong? Pice, I'm sorry, Pice. Well, just let me know what the sound is. I'm the only host here, so nobody's interrupting me that I'm aware of. The bad news about the information age, that we have all this information. Past network is actually disturbing me. Is there any way I can listen back? Yes, of course, Kennedy. They're all recorded, and within an hour of the end of the session, you'll be sent the link to the recording. So if you don't want to listen in, you can do it that way. So while we have all this information almost entirely free at our disposal, problem is there's too much information. There's a lot of junk out there. And that is part of the job of news analysis, is to discern the wheat from, to separate the wheat from the chaff. There's a lot of nonsense out there, and it pays to, you have to be careful of paying attention to stuff that isn't worthy. So the translating events into positions is the work of the nimble. It means you have to be somewhat quick about it. Although oftentimes there are hints, like take the meteorological. Those things, meteorological events don't happen overnight. You see them developing. You see the war in the Ukraine was building for 6 months. We saw that coming along. We knew what to expect. Once the war broke out, many of us knew what positions to take and did fairly well from them. Although a lot of those opportunities have been arbitraged out already. Though major revisions in economics can be joined for more time than trading breaking transitory news like weather. So there aren't that many major revisions in economics, although the pandemic was one of them. That surely was one of them. But most of the time, these news happen fairly quickly. So you have to be quick about it. So here are some sources that I recommend to you. I use Google News for headlines. Google News is a tremendous summary source. It's a news portal, as they used to call them. Yahoo Finance also is a good portal for that. These conglomerate or agglomerate your news sources by your choice. You can choose whether you want to see things about futures or wheat or oil or gold or euro dollar, what have you. Bloomberg, which has a free component. You can get that free. I have a subscription, which isn't that expensive, and I tune it out most of the time because I don't like listening to the hosts drone on and on. But sometimes they have valuable guests, but they also have their headlines when it comes to economics are a tad faster than every other source in the world. So Bloomberg is very well worth the dollar. The Economist is the single best source of news on earth. It ain't cheap, very expensive subscription, but it's the best in the world. What you see on the Friday edition that comes out on Friday morning will then be reflected in the other major news sources the following week. So The Economist is the single best source of news available on earth. Investing.com as a calendar, although we have the market calendar, of course, on our site. Everybody has the market calendar, but investing.com is a good source also of news, and you can do research on investing.com. Price zero. And specialized trade publications, many of which I subscribe to, and all of which are free. So they'll send you, if you're interested in coffee and cocoa, sugar and tea, that's an interesting commercial website. So there are a lot of sites that provide specific data. Now, here's a little bit of background, my opinion about news in general. A lot of people, particularly newcomers to the business, are overwhelmed by news. They can't get their head around it. What is going on in Ukraine? What was that war in Yugoslavia? What is Kosovo? Who are the Bosnians? It's a lot. It's a lot. But what I will tell you is this, that news is a saga with daily installations. So it's a series, a telenovela about which you need to stay fairly informed. You can fall behind, like I just came back from a 3-week vacation, and I didn't read the news at all. I disconnected completely. I went on a fly fishing trip in the backcountry of Montana, horseback really, really isolated, very, very remote. But I know the story well enough so I could pick up, on the plane back. I could catch up. That's what I want to impart to you. You don't have to become a big expert in anything so much. You just have to know the general news flow, what's happening writ large, and then follow the different aspects that interest you as time unfolds. So you can fall behind, but closing knowledge gaps is important and possible following absences. That's the message I want to bring to you. You don't have to be obsessive about it. You have to be consistent, but you don't have to be obsessive. You don't have to spend inordinate amounts of time reading every word of the New York Times. You'll lose your mind. And it's not necessary, frankly. We need to have a well-rounded idea of the fundamentals of any trade we enter. And that is the single most important fact with respect to trading strictly on technical indicators. If you don't know, if you're just entering a technical trade because it's reached a support point and you think it's going to go up, to me, that's not enough justification for me to put my hard-earned money into the market. Now, that'll be taken away by someone with a better understanding of what's going on than me. If, however, I understand that the fundamentals are such that the demand might be rising for that asset and the indicators back me up, then I've got a solid setup, a trade setup, and I'll put my money into that. Now, Oki asks, do you trade the news or trade the news reaction? That's a good question. I understand your question, Oki. The reaction is something else. I trade the news as I understand it will affect the asset. I'm not right all the time. I've told this story before. I'll tell it again. About, it must have been 13 years ago. I think it was 2007. There was a coup in Sierra Leone. No, excuse me, the Ivory Coast. And the Ivory Coast produces 70% of the world's cocoa. The person that took over the government immediately nationalized all the cocoa plantations. I thought to myself, wizard that I am, well, that's surely going to drive cocoa prices up. How can I go wrong with that? I bought a little cocoa. Well, that's a case where you have to know more of the fundamentals than I knew. Price started to fall. Couldn't get it. And then I said, well, the market's not reacting the way it should. I'm ahead of the curve. I'll just be patient with this. To make a long, painful, and losing money story short, I then later realized that Cadbury, Nestle, the giant chocolate producers sit on huge mountains of cocoa butter. And cocoa butter is a semi-refined state that will stay for a long time. They just started releasing it into the market, driving the price down. The guy unnationalized the coffee plantations 3 days later after I had gotten out with about a $2,000 loss. Anyway, I follow the news and react accordingly. Sometimes the reaction isn't as you expect, and in that case, it would have paid to wait for the reaction, as Oki says. But most times, say oil, the S&P 500 with respect to economic news, interest rates, what have you, I trade the news. Another exception to that is the live trading event on the NFP. Okay, I do trade that as a reaction. I know you're a regular in the room, so you know that I wait a few seconds, but that's a different case because it's a live trading event, and that's the only live trading event I trade. We need to have a well-rounded idea of the fundamentals of any trade we enter. Research in our age is a piece of cake. We have at our disposal the same tools the wealthiest and most successful traders do. Scanning the radar is a constant chore. If you aren't hooked in at some level to the storylines of events, this is going to drive you crazy. If, however, you like to be informed and you want to turn that information into actionable opportunities, then this approach could be very rewarding. I would go even further and say that this is the classic example of a business where knowledge is power. Having knowledge about what's happening in the marketplace gives you an edge that most people don't really have. Very few. You'd be surprised at how few people who trade in their own account are really that aware of the news. They may follow tips, they may follow signals, the good ones of which, of course, are based on fundamentals. But, and let me say this without reservation, even my signals, the ones I produce on a daily basis, you have to research them. You cannot take them at face value, and I'll tell you why. Not because me as a source isn't reliable. I consider myself reliable. People that follow my work generally make money, though not always. I lose money like everybody else. But there's an emotionality in trading that's often not recognized. It's not spoken about, and it's sort of a dirty little secret. The markets themselves are not that complicated. And anybody who tells you otherwise is full of shit. They're trying to make you feel inferior. They're trying to make themselves superior. Buy low, sell high, buy low. That's all you need to know about the market. If it's going up, you buy. If it's going down, you sell. Okay, so that's that. The problem is not figuring out what to do even based on the news. If OPEC decides to curtail production, or there's a war in the Ukraine, and Russia, who's a massive oil producer at a million barrels a day, cuts out, well, you don't need to be a genius to know what's likely to happen to the oil price. What you do have to be skilled at is controlling your emotions. When you start and get into a trade that's profitable, how long do you hold on? You start fantasizing. Well, I go into this in great detail in other sessions. I'm not going to go into great detail now, but suffice to say, it's all about the emotionality, not getting too greedy, not staying too long in a trade, or not letting fear overtake you and letting a small loss turn into an account decimating loss. That's what you need to do. That's the real truth. So many times the trade that results from a news item is obvious. Amazon, Microsoft, Netflix, Walmart, Alphabet as a pandemic stay-at-home trades. Once the economy started to bounce back in call it the second quarter, the end of the second quarter of 2020, after the pandemic struck, these guys cleaned up. People were ordering crap from their home because their stores were closed, they couldn't go out. So that was an obvious trade. Sometimes the trade is less obvious. Intuition and insight can throw some of these opportunities into relief. Those of you who did follow our signals were aware of an outfit called Linde. Linde makes industrial gases, argon, acetylene, propane. No, they don't make propane, excuse me, that's a natural. Argon, acetylene, oxygen, including medical oxygen. You'll recall back in the dark days before there was a vaccine, the only treatment available to sufferers from COVID-19 was to sit in an oxygen tent and breathe pure oxygen. Linde makes pure medical oxygen. So that was not an unexpected one. UPS and FedEx following the home delivery boom. Slightly intuitive, but again, you don't have to be a genius to figure that out. In any event, the news is scanned to identify possible trades. You make suppositions. A maritime attack in the Persian Gulf on shipping, that goes back to about 2016 or so. Oil prices could spike, and they did. So we have a question from George. Let's see what he has to say. Although trading the weather, for example, like a hurricane coming to the Gulf of Mexico, this is like known for 5 days or so. That's right. So isn't this already priced in when the hurricane struck? I mean, the oil price won't go up further when the hurricane. Great question, George. And surprisingly, the answer is no. Don't ask me why. I'm not that smart. I don't know. But I can tell you that the U.S. government was sharing the intelligence it had gathered on the massing of Russian forces on the Ukrainian border months before the war broke out, and not only sharing it with the Ukrainian intelligence authorities, they were sharing it with the public. It was common knowledge. Do you think oil price moved? Do you think the price of wheat moved? Do you think the dollar ruble rate moved? No. And I'll give you another example. In your particular case with the hurricanes that strike the Gulf. Hurricanes strike the Gulf all the time. Some of them miss, some of them come close, some of them peter out. But even the ones that they keep saying they're going to hit Louisiana coast, they're going to hit the Texas coast. No. People don't like to go out on the limb on such matters because of the uncertainty. But once it's a done deal, once the war broke out, once they close, once they evacuate the oil rigs and they stop pumping oil, that's when you know. And that's long after the 5 days of. So thank you, George. It's a great question, and that's my answer to it. I hope I satisfied you, sir. So getting back to the presentation, that's really the end of the presentation. There's not much to it. It's a fairly simple proposition that we're proposing today. And so let's open the floor to some more questions. Anybody? Feel free. Yes, Barbara asks, how long does it take to build up a knowledge base sufficient to trade in the news? Well, Barbara, it's an odd question to answer. Let's drill down and let's just take oil, one of my favorite assets to trade. I've been trading it for decades. It's been very good to me. I put 3 kids through college and 2 through graduate school on the oil trades. When do you close the trade from the news, Oki asks. Well, those are subjective questions, Oki, as you know. You close a trade when you've reached your profit objectives. Now, that's a sort of answer, and it's a question inside of an answer. What's the profit objective? And again, I do sessions on entries and exits, how to set stop losses, take profits based on. I do ones on money management, risk management, all of which deal much more specifically with your question. But suffice it to say, having done your homework sufficiently to know when you're going to get out, you get out when you reach your profit goal. Can you let them run? There are a lot of people say you just let the profits run. Excuse me, pardon me. I wouldn't want to keel over on live camera. Yeah, you move your stops up if it's really profitable. I don't like that so much. I like to be hands-on more. So I will close a trade, take my profit, and then re-enter it if it's still moving in that direction. I like to take my profits. I'm a conservative. I have an appetite for risk, but I don't like it. I like to minimize my risk. So hope that answers your question, Oki, about taking news. All trades, whether it's news from trades or even the live trading event or even a long-term trade, as opposed to an investment that you put your money in and forget about it because you're going to be in for so long, temporary dips and spikes and peaks are irrelevant over the long run. Traders are not that way. We are in and out, in and out. We try to take money out of the market when there's an opportunity to do so and not let the market take money out of our pockets when there's opportunity for that. We try to cut our losses short. So it's about the stop loss and the take profit. That's the short answer, Oki. I hope I've given you some sort of answer that's useful. Pius asks, is it profitable for beginner investor to follow big portfolios like Warren Buffett's or Nancy Pelosi's? Forget Nancy Pelosi. Nancy Pelosi trades on inside information, and that's one of the huge loopholes of serving in the U.S. Congress. Every single congressperson in the United States leaves a millionaire. So don't follow hers because you don't have the advantage that she has. Buffett's investment portfolio is great if you're in the long run like he is. If you're an investor, go follow Warren Buffett. Can't do better. We are traders. We're speculators. We're here. We're in and out. We take money in and out on a regular basis, and we don't really follow big time investors because we're not in. We're trading. We're trading in a different game. I heard you say when price goes up. I heard you saying buy when price goes up, sell when price goes down. I was thinking opposite until now. What's your argument here, Mohammed? You're insinuating, I don't know if you're stating it clearly, but it seems to me you're insinuating the contrarian point of view. That means that and that's a scalping point of view also, a scalper is a contrarian. But that's in a very, very narrow band. As prices go up, you're going to start. I'm a trend trader. I trade with the trend. The trend is your friend is an old aphorism for very good reason because it's very useful. Oh, I'm glad. Okay. My argument is as follows, Mohammed. As prices go up, you want to be with the trend. If you can take a little bit of that out and make profit from here to there and get out with a profit, you're a success. Did you leave money on the table? Who cares? If you think there's way more money on the table, get into the trade again. But selling when the price goes down, to my way of thinking, is absurd. If the price is high and it's reaching a resistance point and you see volume going down, that's a good selling opportunity if you can. But these are timing trades where you think that the trade is going to reverse and you try to get in. I am not that good. I don't get the beginning and the end. I try to get the middle. If I see something's moving clearly, I jump on the train, but up or down. I don't have to get the beginning. I don't have to time exactly when it's going to reverse. I'm not that good. But I am good enough to see when there's a trade that I can hitch my little wagon to, and it's going to take me to profit land, and I'm going to get off the train, before it takes me to loser land. That's my argument, Mohammed. Does it make any sense to you? I hope so. But tell me if you need more clarification. I'll be happy to share with you. My pleasure, sir. Now, Pius comes back and says, big portfolios buy for long-term and beginners are searching for short-term. Are hedge funds safe for beginners? Hedge funds usually have a very, very high buy-in, Pius. Usually 100,000 minimum, oftentimes $250,000, oftentimes 10 million. So these hedge funds, by the way, you're out. You put your money in and then you shut up. You might be able to talk to somebody, but generally speaking, they won't talk to their clients on a regular basis. You just trust them to trade your money profitably. So it's a different kind of animal. Oh, and also you can't get your money out whenever you want. There's lockup periods, there's notice periods. You have to give them often between 30, 45, 60 days notice before you can get any money out. Hedge funds are for, generally speaking, for investors, not for traders. And traders that are successful once they start to open their doors too widely and have too many customers, they tend to start to do less well. That's a well-known phenomenon. So, you can trade. If you're interested in trading for yourself, you have to learn the ropes. But what I want to say, and I want to end up with this point is, I hope I've answered your question, Pius. I want to end this session on this kind of point. This news business is daunting, particularly to newcomers. We're surrounded by hundreds of commentariats that, my pleasure, Mohammed, that blab to us constantly, and I include Bloomberg in that. They never shut up. They just try to. Many people try to sound way more intelligent than what they have to say indicates they are, and you have to separate the wheat from the chaff always. But you don't have to consume everything at the what's it called? Buffet. Focus in on something in particular. Learn something, whether it's oil, whether it's the S&P, whether it's the US 10-year bond, whether it's euro dollar or dollar yen. Focus in on something and then try to segregate the news on that asset. That'll help you. Once you get a handle on that, and you'll see that most days don't have a lot of news germane to your particular asset. And once that starts to happen, you might want to expand. Go from oil, go to gold. Take a look at silver. Copper is important. Expand and then keep your focus fairly narrow until you get a sense that, yeah, I can manage this. I'm not overwhelmed. There's only so much that's happening in these markets at any given time. I can catch up fairly quickly, a couple hours of research, and I'm up to speed on what the hell's going on in the oil market. I don't want you to be intimidated. My message to you, if you leave with one message from this, anybody of average intelligence can turn news into viable, profitable, actionable trades. Let me say, in full disclosure, they all won't be profitable. Nobody's profitable all the time. And you beginners need to know this very well. I lose money like everybody else. And anybody who tells you they're not losing money is lying to you or simply doesn't trade. But the sine qua non in our business of success is making more money than you lose. Lose you will. We all lose. Anybody who thinks they're not going to lose or doesn't have the stomach to lose and see their hard-earned money vanish before their eyes, this is not the business for you. If, however, you have an appetite for risk and you can control your emotions and not be overcome by fear or greed, that is to say, fear of getting out of a losing position, fear of just pushing that close button and seeing the loss materialize, or greed saying, okay, I'm going to get out even though I'm still making money. Everything is green. I'll get out now. If you can overcome those hurdles, it's using the news to trade is a crucial tool, a really crucial tool. You don't have to be a genius. You don't have to be a newsaholic. You don't have to be obsessive or compulsive about it. Just take some time and consistency. And that's the message I really want to leave you with. So, ladies and gentlemen, I see there really aren't too many more questions. I'll open it up one more time. Let me remind you to please take a look at the poll on the dashboard. It says polls. You'll see it on your control panel. Please fill out the polls for us. I'd appreciate that. And fill out the survey at the end. Each one has each one has 5 questions or 3 questions. Nothing to it. It'll take you a couple of minutes each one, but it helps us a lot. And oh yes, and so therefore, let me just say on behalf of the staff and the management here at Alvexo, we're always humbled and gratified by your continued patronage of us as your online broker, and we're grateful to you for that. You guys pay our bills, and we do the best we can for you, so that it's a healthy and profitable and worthwhile relationship always around. For those of you who have come to the session looking for an online broker, excuse me, please consider us. Please consider opening an account with us. This is an example of the kind of work we do for our clients. We really do the best we can. We work hard for our clients, and I think it'd be good for you to open an account and see how good a broker we are for you. So, ladies and gentlemen, with that, I'm going to take my leave. I want to thank you all, particularly those who participated with your questions. It always makes it much more interesting for me and everybody else. The recording will be ready in about an hour or so. You'll get a link to that. And again, on behalf of the management, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. My pleasure, Osman. Good to see you again. Good to see you as always. Okay. Yes, Kennedy, it was nice to have you in the room. You'll get a link. You'll get a link to the recording within an hour, Kennedy. All right, ladies and gentlemen. Bye-bye for now. Thank you, Sarah. My pleasure. Welcome to the room. Bye-bye, Kennedy. See you.